You know, it sounds like one of those riddles, doesn't it? Every major government on the planet is just swimming in trillions and trillions of dollars of debt. The numbers are, well, they're staggering. And yet, the world keeps on spinning. So it brings up a really fundamental question. Who is this mysterious global creditor? I mean, where does all this money actually come from? Okay, we're going to dive into this because the answer, it pulls back the curtain on the strange, interconnected, and yeah, kind of terrifying mechanics of our whole financial world. And you'll see it involves you a lot more than you might think. Okay, so to even start to get our heads around this, let's just begin with the biggest number of them all, $38 trillion. That's the U.S. national debt. It's a number so huge, it's almost meaningless, right? It's just an abstraction. But try this. If you spent $1 million every single day since the pyramids were built, you still wouldn't have spent this much. It's insane.
And hey, this isn't just an American story, not by a long shot. Just look at Japan, a famously industrious and super wealthy nation. Their government debt is more than double the value of their entire economy. Now, for any normal business, or for you and me, that would mean instant bankruptcy, game over. And yet, for major countries, the rules just seem to be, well, different. So what is actually going on here?
All right, to solve this global puzzle, we've got to start by cracking the code for just one country. So let's stick with the United States. Who, specifically, is holding that $38 trillion IOU?
And right away, we get the first and honestly most surprising piece of the answer. Just look at this chart. The biggest lenders to the U.S. government are, well, they're Americans. A full 40% is held by American investors and institutions. And then, you see this next slice? A whopping 34% is held by the U.S. government itself. Now add those up, that's nearly 3/4 of the entire debt held right at home. So let's dig into that government owes itself part, because I know, it sounds totally bizarre. This is what they call intragovernmental holdings. And here's the deal. Massive government programs, especially the Social Security Trust Fund, they take in more cash than they pay out, creating a surplus. Now, by law, they have to invest that money in the safest possible asset on Earth, which just so happens to be U.S. government bonds. So really, the whole thing is just a kind of accounting loop. It's like borrowing from your left pocket to pay your right pocket. When the government needs to spend money, it can just borrow from the Social Security savings account. It's a promise the government makes to itself to pay back future retirees. It's basically a giant IOU from one part of the government to another.
And this is where you start to see how the system touches, well, pretty much everyone. Just picture a teacher in California. She might see the news and get worried about the national debt. But her state pension fund, the money she's counting on for retirement, it needs a rock-solid, super safe investment. So what does it buy? U.S. government bonds. She is at the exact same time both a borrower as a citizen and a lender through her pension. And you know what? Chances are you are too.
Okay, so we've solved the biggest piece of the puzzle. Americans are the main lenders to America. But that still leaves trillions of dollars held by other countries. And this is where the story gets truly global. I mean, why would nations with their own big debt problems be so eager to lend money to the U.S.?
The key here is you've got to completely flip your perspective. For central banks in places like Japan, China, or the UK, U.S. Treasury bonds, they're not seen as risky debt at all. They're seen as the world's ultimate safe haven asset. Think about it. When there's a crisis anywhere on the planet, money doesn't run away from U.S. debt, it floods into it for safety. It's basically the financial world's bomb shelter.
And this demand creates this fascinating, self-sustaining loop. It works just like this. Step 1. Americans buy billions of dollars worth of cars and electronics from a country like Japan. They pay in US dollars. So step 2, these Japanese companies are now sitting on a mountain of dollars. What do they do with them? They sell those dollars to Japan's central bank, which, step 3, uses them to buy US Treasury bonds. And boom, the money flows right back to the US in a perfect, neat circle.
But even with all that, our pensions, this global trade loop, it still doesn't fully explain the absolutely astronomical scale of modern government debt. There's one more piece to this puzzle, and it's the most radical, the most controversial, and honestly, the most mind-bending piece of all, the ability to literally create money out of thin air.
It has a name, quantitative easing, or QE for short. But let's just forget the jargon for a second. The simplest way to think about it is this. The central bank, like the Federal Reserve in the US, has a kind of digital money printer. So when the government needs to borrow huge amounts of money, especially during a crisis, the central bank can just create brand new money and use that new money to buy the government's debt.
So here's how it plays out in a crisis. Step 1. A disaster hits. Think the 2008 meltdown or the pandemic, and the economy just seizes up. Step 2. The central bank steps in and creates, let's just say, 1 trillion new digital dollars. Then step 3, it uses that newly created money to buy up government bonds on the open market. This floods the financial system with cash, and it keeps interest rates super low, which makes it incredibly easy for the government to keep borrowing and spending.
Now, this right here is probably the most profound and, unsettling part of this whole system. This money doesn't come from your taxes. It isn't borrowed from another country. It is simply willed into existence. As one former central banker put it so bluntly, they create it with keystrokes.
So let's just recap. We have a system where the government borrows from itself, where our trading partners lend our own money back to us, and where the central bank can literally create money from nothing. Now, it's kept the lights on through some major crises, but at what cost? What's the hidden price tag for all of us?
Well, the theory behind QE was that all this new money would sort of trickle down and lift up the whole economy. That was the idea. But the reality? Well, it's been pretty different. That new money tends to flow directly into financial markets, and that pushes up the price of things like stocks and real estate. Now, that's great if you already own those assets, right? But for everyone else, it just widens the wealth gap. It's a huge reason why housing, for example, has become so unaffordable for so many people. And then you have the direct bill. We're talking about just the interest payments. This chart, it's a real stunner. In 2025, the U.S. is on track to spend $1 trillion just on interest. That is more money than the entire U.S. military budget. Just let that sink in for a second. That's $1 trillion that can't be used for healthcare or infrastructure or education because it's all just going to service past borrowing.
And look, if that's the cost in a wealthy country, the impact on the developing world it's truly devastating. Right now, over 3.4 billion people live in countries where their governments are trapped. They're forced to pay more to foreign lenders than they can spend on educating their own children or caring for their sick. It is a brutal cycle that just stifles progress for literally half the planet.
So, if the system fuels inequality, if it comes with these crushing costs, and it creates these impossible choices, why doesn't this entire house of cards just collapse? Well, the reason it keeps going is because of a very powerful, but also very unstable balance of forces.
You see, there are some deep structural reasons for all this. For one, aging populations in wealthy countries create this constant, massive demand for safe retirement assets, like government bonds. Then you've got the global trade system that needs a place to park all those recycled dollars we talked about earlier. And weirdly enough, there's actually a global shortage of these ultra-safe assets, which means the world kind of needs countries like the US to just keep on borrowing.
And that finally brings us all the way back to our riddle from the beginning. After all this, who is the lender when every nation is in debt? Well, the answer was hiding in plain sight the whole time. It's us. It's our collective retirement funds, it's our bank savings, it's our governments, and it's our central banks all acting on our behalf. We are all just lending to each other in this vast, self-referencing, completely circular system. But this entire global architecture, this incredibly complex, powerful, and fragile machine, it isn't ultimately built on gold, or on oil, or even on armies. It's built on something much more delicate: confidence. Just the shared belief that the bonds will be repaid and that the currency will hold its value. So the final crucial question isn't just who is the lender, it's what happens to all of us when that confidence finally runs out.